We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's get back up to business. Okay, guys, we are checking out EUR CHF. That will be the euro dollar versus the CHF franc. Forex 101, we will be identifying market structure. Number 2, we'll be identifying the overall trend in the market. Number 3, we'll be identifying SR lines in the market. Number 4, we'll be identifying patterns for entry in the market. Let's grab our red brush. Okay, let's take a look at what's going on. Okay, back in this area when markets started off, that was back in May of 93. So May of 93, the market started off into a resistance area, and this is the highest the market ever was ever in. The market started off extremely high and it just dropped. So we can see that we have, let me see, about 1, 2, 3, 4 pushes to the bottom, 3 to 4 pushes to the bottom. The market ran into an area of support. I see a pattern, so I'm going to backspace this a little bit. I'm going to divide the pattern that I see. So with the 4 push downs, 3 to 4 push downs, I see the market done. Here go the pattern is a W, and we know after we see a W, it will be a push up after the retest. So here's the first leg of the W. This is the second leg of the W. It's the third leg of the W. And then from there, here's the fourth leg of the W. And then we have the retest. Now the retest looked like it happened twice. It could have happened here or it could have happened here. So let's say we found a retest here, which we did, and then it happened again. So you probably 2 places to catch entry. Here go to retest, and then the market pushed right up. Okay? From there, the market ran into another area of resistance, but it wasn't able to go higher from previous areas. From there, the market pushed back down to an area of support. And it pushed back up to resistance to come back down. So it's like almost like a consolidation a little bit in this area here. From there, the market consolidated sideways, didn't really do much. And then it broke back down to previous areas of support from previous time. The market tried to bounce up out of it, wasn't able to hold, so it broke through the support. So once it broke through the support, it created new areas of lower lows. From there, the market played around new areas of resistance, kind of just consolidated across sideways here. From there, the market pushed up and it broke through our resistance to retest our resistance to break up further, to come back down. So it just basically just kind of bounced up and down, sideways consolidation slightly. And then from there, something happened in here. I see a retest and the market pushed right back up 1, 2, 3 times, or 2.5 times. From there, the market pushed right back down to the support where we see this long candle wick. So when we see these wicks, that means the market is losing momentum. So most likely there's a chance it may try to push up, but it don't happen all the time, but most of the time. With this case here, it didn't happen. The market pushed up, wasn't able to go back to previous areas of resistance. So then the market just pushed right back down, broke through our support again, just to retest our support, to break down further. So once the market pushed back down, there's a few things that's going on down here in this market. So it's getting real wicky down here. So we see these long wicks. So when we start seeing these long wicks, the market is just identifying that the market's going to try to turn around. And it may not be, I mean, remember, we're on a monthly time frame. So this is like price action is last green candle. And this is months and months and months and months ago. It took maybe years for this market to start pushing up. So from there, we had this long wick to the bottom, and the market tried to push up, wasn't able to, came back down, and this is the resistance area here. came back up to touch resistance, wasn't able to break, so then the market just basically dropped back down. It's a big red drop. So this big red candle came, this big red body of this candle came with this red wick. So like I said, when you start seeing these wicks, and they start pointing out the way they do, that means the market's trying to do the reversal. It may do the reversal. So from there, the market came down. This is the area of support is at now. The market broke out of it, came up out of the support. They come back down close to support, so it's retesting previous areas of support somewhere in there, and then the market pushed back up. Now we're trying to see the market's trying to reach previous areas of resistance. Wasn't able to make it up to the top here. So what the market do? Just came right back down. It came right back down to our support, and now the market's going to try to come up again. So basically the market's trying to come back to previous areas of higher highs. So to make the market is at the lowest low it has ever been, and it's trying to turn back to previous areas of a high somewhere up here. So we just identified market structure, so we can see that here we in some type of uptrend. I'm going to clear this up a little bit, take all these red drawings off. The area we're going to pay attention to is the last candle. So this last candle here, this last green candle right here is price action, what I'm on top of. We're going to draw a rectangle around the area of the higher highs and where area of the lower lows are. So with this drawing right here, this rectangle, it shows that, okay, if the market comes down, it breaks our rectangle, it's going to head somewhere down here. If it keeps on going up on the way it looks like it will, then it's going to try to reach the top of our rectangle for higher highs. So now we're going to identify, so we identified the overall trend, which is an uptrend. We're going to grab our green trend line. We're going to put it right here, and we're going to pull it all the way up top to this high highs area. So this is where price is trying to return at. Number 3, we'll be identifying SR lines in the market. The way we can do this is we look for price action once again, and we sit here and say, okay, if price action goes up, how far would it go? And that will be the next peak area. So market is trying to return here. If the market turns around, it will go here, back to the bottom of this major area of support. If it breaks this support, then it's going to try to come down further. Let's go down to time frame. I'm going to go back to the monthly. I forgot one thing. So also, besides you creating your higher highs and your lowest lows on the time frame, you also want to try to get some in the middle midpoint. Where price action is trying to break this level here to head up to the top. So let's say if price breaks this, it'll go up further. For market to get here is going to be a long way. So we're gonna take this SR line and let's draw it to our next peak above price action will be here. So let's say we're looking for price to go here to the top of our rectangle, which would be the high highs area, but one section at a time. If we go down our time frame, we're going to add more additional SR lines in between our green SR lines, and we also going to change the color to blue so we can have an idea of what color we are marking up with the SR lines. So we can see the green was the previous one, and this one we're going to work on the blue. So while we're in this time frame, you're going to work in creating SR lines between our green lines, and we're going to start from the top, and all we're looking for is peaks. And once we get to the bottom, we're going to work back up, and we're going to look for inverted peaks. So here is a peak here. We're going to change that color to blue. There's another peak here. There may be another peak here. Something's going up. There's another peak here. There's another peak here. There's another peak here. There's another peak here. Okay, so on the way down, from the top down, we grabbed all our peaks. Now we're going to grab our horizontal ray again, and we're going to work from bottom up, and we're going to look for inverted peaks. So for example, we're working inside our line, so here's our peak here, inverted peak here. There's another inverted peak here. There's another inverted peak here. And I think that's it. So if we see, we can see that price and the bodies of the candles are perfectly, the bodies of the candle, price action, and the wicks are perfectly touching all our SR lines. It's bouncing all up and down, in and out of them, which is good. So it looks clean. It looks very, very clean. If we zoom in, it looks a lot cleaner. So everything just bouncing up, all these wicks. It's hitting our SR lines, coming back down to SR lines that come back up. And if we go down the time frame, we will be identifying patterns for entry. Let's go to daily time frame. Let's see what we see. Okay, so to identify patterns for entry, what you want to do is go to Google, type in Forex pattern cheat sheets, go to images, and you will want to visually learn how to study what you see. You don't have to know the names of them. If you choose to, do so, but I feel like the main concept is get your eyes acquainted of what you see in the market, so your body can you get used to it, so you can take these trades efficiently and effectively. So we do know we're in an uptrend. Okay, so what price actions currently is right now, we are in an uptrend, so I'm going to grab our long position. So this right here is a pattern. The green is over the red. It's called the engulfing pattern. And right here is a long wick to the top. So there's something on this market where the price may not come all the way up. It can turn back down to come back up. The only reason I'm saying that is because of this long wick. So when you see these long wicks like that start popping out like this, that means the market came up, it lost momentum. It came up, it closed out, it tried to close out here, it dropped down, it closed out here, so we got this long wick. When we see long wicks, it shows that it may be a chance the market may not be able to go up higher, but this is like a 50-50 trade, I would say, because I would see a long wick to the top. And like I said, when I see long wicks to the top, it shows that the market may reverse. But then on top of that, I see a pattern. I see an engulfing pattern. So the green engulfed the red. Truthfully, for a move like this, it's 50-50. I wouldn't take the trade. I would wait until the market do a little more stuff. So what the market may try to do, as we in an uptrend, you may be looking for W's. So the market just did a push up from somewhere here, and then the market came back down to come back up. It can do a W, it can drop back down, it can go further up. I can't really tell because it's too early to identify. Like, if you don't see a move, don't take the trade and don't rush it. Just take your time, because at the end of the day, the market is going to identify the move. And once you see the move, because we learn patterns, we just take the trade. So let's say if we did see, let's say that this market closed out at 5 p.m. This last price action candle closed out at 5 p.m. and it identified trade and it looked clean. We'll take it from where price is at all the way up to our next green line. So once we grab our long position, Let's say we found entry here. We would take it out to our next green line, which will be here. Okay. I like to trade the breakout and the retest. Some people don't. Each his own. So what a breakout and retest is, I'm going to identify them what that is. So for example, if I trade breakouts and retests, this is a breakout and retest. For example, the market came up, it broke our SR line, it comes back to retest our SR lines, and what we see is engulfing, and this looks like identification for entry, and then once we find that entry, we take it up to the next level. So once it breaks through this, it may retest this green line to shoot up further. Sometimes it doesn't. Sometimes the market may just come up, break through, head to our next area of resistance to come back down and retest to break up further. But whatever the move is, we're gonna see what's gonna happen. So all you gotta do is keep your eyes open and take your time in the market. So with this trade right here, we found entry that will give us, this is an amazing trade. This is 124 pips on the way up. And let's say if we had the market turned on us and it went back, that'll probably be an estimate of So I'll be an estimate of 33 pips for the low and 124 pips to the high. So the TP will be 124 pips. If we find entry for this trade, if the market goes back and hit our low, that will give us 33 pips for our stop loss. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for watching and thank you for your attention.